Over $62 million in leveraged Bitcoin positions, all dangerously concentrated in one single price zone, creating a massive liquidation trap right at the end of the year. $62,110,000. That number right there acted like a giant magnet for volatility. We're not just talking about the collateral on the line, we're talking about hundreds of millions in total trade value that was at risk of being completely wiped out. So here's the puzzle, right? Everyone and their brother saw that massive liquidation wall building up above $90,000. I mean, the setup was screaming for a violent move up. So why on earth did the price suddenly crash first? We're going to break that down. Drop a like and share if you find this valuable.
Okay, here's how we'll tackle this. First, we'll look at the setup, that giant wall of leverage. Then, the contradiction, the downward cascade nobody saw coming. After that, the reset, which gave us a clean slate. And finally, we'll zoom out for the macro view, putting network strength up against trader risk.
All right, first up, the setup. Let's take a look at how the market was coiled up like a spring heading into those final days of the year. This heat map from December 28th tells the whole story. You see these bright yellow bands right here, between $90,500 and $91,500. That is your $62 million wall of short positions. The market was just churning right underneath it, building up a ton of pressure. Make sure you subscribe to the YouTube channel for more deep dives just like this. And you know, the real danger here was just how dense these liquidation levels were. Any significant price move into that zone would have been like pouring gasoline on a fire. It would have acted like pure rocket fuel, triggering a cascade of forced buybacks and sending the price absolutely flying. But that's not what happened. And that brings us to the big contradiction. The downward cascade, all that rocket fuel was sitting there, ready to go, but the market never lit the fuse. So check this out. Look at the price action from December 29th, right around 3 a.m. Instead of punching through and attacking that huge wall of liquidity up above 90,000, the price rejects the highs and just dumps, moving aggressively down. You can see it hunting for the smaller, but still pretty important, pools of liquidity down at $88,000 and $87,000. Follow us on Twitter for more updates on these market shifts. Now, this wasn't just some random move. This was a textbook liquidity hunt. It's a strategic maneuver designed to trigger all the stop losses and liquidations in a less obvious spot. The whole point is to flush out all the over-leveraged traders before the bigger, more anticipated move can actually happen. And that leads us right into our next section, the reset. Because this downward purge completely wiped the slate clean just in time for the year-end. Just look at the difference here. On the left, you've got the messy leverage map during the purge on the 29th. And on the right, you have the much cleaner reset map from the 31st. I mean, it's night and day. The board has been totally reset, and that dense overhead resistance got thinned out in a big way, creating a brand new landscape. Drop a like and share if you find this visual breakdown valuable. So what does this new landscape actually look like? Well, first off, that overhead resistance is way thinner. Now we're seeing new liquidity starting to build up again near 88,500. And at the same time, a new support level is starting to really solidify down near 86,500. These are the new critical levels you've got to watch. So while the derivatives market was basically a casino in total chaos, what was happening with the actual Bitcoin network? Let's zoom out and take a look at the network strength versus all this trader risk. Okay, so everything we've been analyzing so far is the short-term, often chaotic world of derivatives trading. This dashboard, though, this gives us a look under the hood. It shows us the fundamental health of the Bitcoin network itself. Let's just focus on two key things here. The hash rate is near its all-time high that shows massive miner confidence and a huge investment in keeping the network secure. And on top of that, the next difficulty retarget is estimated to go up by 2.3%, which tells us the network isn't just secure, it's still growing. The fundamentals are rock solid. You should subscribe to the YouTube channel to stay ahead of the curve on this stuff. So what you have here is this clear divergence, right? You've got the short-term trader volatility on one side and the long-term network health on the other. While leveraged traders are getting absolutely wrecked, the core network itself just keeps getting stronger and stronger. And look, this volatility, it really does serve a purpose. The market has now successfully flushed out the weak hands, and it's building a much stronger foundation for whatever its next major move is going to be. So here's the setup as we head into the new year. Number one, we have established downside support. A pretty clear floor has formed near 86,500. Number two, that major overhead resistance target is still sitting up there above 90,000. And number three,
The break of this range is what's going to define the market's direction for the start of 2026.
And that leaves us with the million-dollar question. With the board completely reset, which pool of liquidity gets hunted next? Are we going for the support below or that massive wall of resistance up above? Subscribe and drop a like below. Follow us on Twitter for more updates. See you in the next one.